One thing I can almost count on with entrepreneurs is that cash flow is going to be a stressful, complicated mess. Why is it so complicated? Well, maybe cash flow is complicated within the business itself, right? Figuring out, what expenses are going to happen, payroll, what to pay yourself, supplies, whatever it is, right? Cash flow is just complicated. The second layer is there's added complexity determining what cash is yours versus what stays in the business. Every entrepreneur I know struggles with this. Third, most business owners are reactive instead of proactive. You're kind of reacting to events as they come rather than strategically planning and such. After paying yourself, there's additional complexity, right? So once the money's yours, or at least you think it's yours, you still got to manage taxes, pay quarterly taxes, you got your personal budget. Are you going to save anything? You probably should. Where does that money go? And then finally, are you going to have to reinvest in the business if the business needs cash? Cash flow stress also impacts both the business and the family, right? So there's always a tension between securing financial well-being for your family and growing and protecting your business as well. This is inevitable. It's okay. This is why we create a cash flow system. So here's how we teach our clients to manage their cash on purpose. Number one is for the business. We want to create financial clarity and stability, right? This is what a cash flow system is going to offer you. It's going to enable better decision-making with accurate data. We're going to prevent cash emergencies and shortfalls, or at least do our best, right? And then we're going to support growth planning, right? Are you actually reinvesting in the things that matter within your business? Cash flow systems allow for this. For your family, right? The other aspect of this, for your family, cash flow system reduces financial stress and uncertainty. It creates clear boundaries between business and personal finances. That's important. It enables personal financial planning and goal setting. Yes, you and your family, you have goals as well, right? You have your own mission, all that stuff that is connected to, but also separate from the business. And then finally, it's going to improve communication about money with your spouse and family, your loved ones. And this is so crucial and so important that we want the cash flow system to help unify the conversation around money with your family. The first part of this cash flow system is we're going to build a foundation. In other words, we need to build your team. So first and foremost, you need a bookkeeper and you need a tax pro. A bookkeeper, let's get this out of the way. Yes, you need a bookkeeper. Yes, you. I know you know how to use Excel. Still hire a bookkeeper, right? I know you know how to use QuickBooks. You still need a bookkeeper. It shouldn't be you. It shouldn't be your spouse. You've got other things that you can do in the business that are going to add more value, and you can outsource your books. When you get clean books, it enables good and forward-looking decisions. It's also going to prevent costly mistakes because you, let's say, miscategorized an expense or did something else wrong because you just didn't know better, right? Or you were moving too fast because guess what? This isn't your core competency. Quality books are the cornerstone of your financial structure. Hire a bookkeeper, right? Number two is I think right off the bat, you get a good tax professional in place. Some people will say your bookkeeper can do your taxes. I disagree. I think you want a specialist, honestly. The tax professional is going to help with quarterly estimates. They're going to file your taxes. And they're going to hopefully do some tax planning for the business. Every year, you're going to want a tax projection to adjust for fluctuating income. Some years you will owe more in taxes. You don't want a surprise come March or April, right? And you have to scramble for cash or whatever it is. The final part of the team would be your wealth advisor. I think this is also a crucial team member for entrepreneurs. They're going to help you create and coordinate the entire cash flow system, customized for you, right? They're going to act as a financial strategist, right? So how do we take all that financial data from your taxes and your books and help you optimize a system that achieves both your business and personal goals? They're going to provide expertise on saving strategies, investment options, acts as a financial accountability partner, right? So they're actually going to make sure this stuff gets accomplished throughout the year. Hey, did you schedule that appointment with your CPA yet? Would you like me to do that on your behalf? I'll be there with you. Are your books clean? Let's look at your P&L. All that fun stuff. A good wealth advisor is going to help you with that. Final, and this would be for maybe a little more complicated business or a growing business, is hire a fractional or full-time CFO. You might not be a financial expert. In fact, I suspect that you aren't because you're out there running your business, right? And guess what? You don't have to be a financial expert to succeed. You get the opportunity to work with other high-level professionals and build a team that serves you, your family, and your business. Within the business, we want to allocate cash for current and near-term business expenses, right? If your revenue comes in quarterly or even on a less regimented timetable, you might need to set apart some money to pay contractors, employees, other expenses for the business, right? So you have to kind of manage your own cash for future expenses. You're also going to build appropriate reserves for contingencies, right? So it's like if revenue isn't what's expected, you do want a little money in the business to help cover those costs. Avoid being overly conservative with business cash, right? So this is a mistake that I see time and time again. And it's really because you just don't have a plan, right? And so you kind of default to being overly conservative. Bigger businesses may consider a line of credit, like that's an option. And there's different approaches to managing cash based on business entity type. So for this video, we're mostly focused on pass-through entities like partnerships with sole proprietorship and S corps. Once the money transitions over to your personal balance sheet, and by the way, I think there should be a separation there, right? You should have your business finances and then you have your personal checking, and those aren't the same thing. That would be a no-no, right? So once everything transitions over to your personal accounts, now what do you do? And people kind of forget this step, but there's an added layer of complexity here. In fact, I think this is almost the hardest part it's like last mile implementation. So let's zoom in a bit more on your personal cash flow system and what those buckets are. And basically, it's what purpose do you need that money to serve? So number one is tax management, right? So what people don't understand, or entrepreneurs often don't understand when they're first getting started, is that this is different than a W-2 job, right? There is no automatic withholding on your taxes. When you get paid, you have to pay taxes on everything that's coming your way. And by the way, those taxes are assessed quarterly. You now have to pay quarterly estimates. This is a complicated thing, and it's really tough to get a handle on this. In my experience, it takes a couple of years for most business owners. But what I suggest is that you create a separate tax account. So once again, money's flowing from the business to a checking account, a personal checking account, and then we're going to distribute from there. Okay. So the first separate account I suggest you make is the tax account. And what I would say is for every, let's say $10,000 that comes your way, you're going to put a percentage into the tax account. I say 30% to 35%. You're paying federal taxes, remember, FICA taxes, which are Social Security and Medicare. And then in many cases, you're also paying state income tax as well. Now, obviously, this depends on where you live and how much your household income is. Does your spouse work? So this is going to be custom for each person, and that's why you need a tax person. And remember, you have to pay quarterly tax estimates. So you're going to take the money in that account and you're going to send it out the door April 15th, June 15th, September 15th, January 15th. And then once again, work with a tax professional to adjust estimates based on the actual business earnings throughout the year. So I usually suggest my business owners get 1 to 2 tax projections over the course of the year. So once we've set aside money for tax, the next step is to create a savings flow from the money in that account. We can set up a flow to a cash reserve account, right? So this is going to be a high yield savings account or something like that, right? So let's say you send $5,000 a month to this rainy day account to build up your family cash reserve. That's really important. Another flow can be retirement contributions. So maybe you put in a SEP or solo 401k, or you have Roth IRAs or backdoor Roth, whatever it is, right? I love it when my business owners also have a brokerage account. We also call these a taxable account or after-tax account. The beauty is these accounts offer a lot of liquidity, right? So it's really hard to get into retirement accounts if you need that money, often like a penalties assessed or something like that if you're under 59 and a half. The brokerage account, you might have to sell some stuff that's up or down and pay some taxes or whatnot. But that money's, it's more liquid, right? It is more available to you. You can get at it if you need that cash. The key to all the saving as a business owner is to automate as much of it as possible. to make sure that those transfers happen on a consistent schedule. Now that we've set aside money to our tax account, we are doing some retirement savings and long-term savings as well. The next step is what I call the spending account, and actually the mandatory spending, right? So this is going to be your utilities, mortgage, rent, daycare bills, right? Gym bill. And what you're going to do is what I advise my clients to do is to transfer a targeted amount to that checking account, probably 2 to 3 months worth. And then you have all your automatic payments coming out of that. And that can include credit card bills and all that stuff for groceries and all that fun stuff. And then you can just monitor the account balance as a spending gauge, right? So without having to get too granular on the day-to-day expenses or day-to-day spending, and it's a really good signal without having to put too much time and work into it. And finally, there's one more bucket, and that would be a saving and spending account. This can be for regular expenses, both fun, like travel, and less fun, like property taxes. So let's say instead of trying to fund your summer plans out of summer cash flow, right? If throughout the year, every month you put $500 or $1,000 or $2,000, whatever it is, into your travel account, your summer vacation would be funded, right? And maybe even that winter trip to Hawaii or Mexico or whatever. It's already paid for. It's already saved for. Other one would be like a property taxes, right? So if that's not taken care of on your mortgage and you're paying property taxes once or twice a year, you set aside that money throughout the year for that anticipated bill. Other ones can be like buying a new home, a renovation. But the idea is that every irregular expense is broken down and accounted for monthly. So I designed the on-purpose system this way to specifically avoid these common cash flow problems that we see entrepreneurs face. So the first one, I see this time and time again, is that cash builds up without purpose. And often this is going to stem from undefined fears, right? So what if this contract falls through? What if I'm going to need this money in the future? What if business opportunities change or the economy change or whatever it is, right? And the irony is that fear of the mistake creates a mistake, right? So that money is just sitting there. It's not making a return. It's not doing anything for you. It can also, the fact that you have, let's say 100,000, 200,000, or even more, I've seen plenty more. It can create a lot of confusion and tension with your spouse, right? What is this? Why aren't we doing anything with this? Can we spend it? Can we save it? Like, why is this money just sitting here? So what do we do instead? You can put the money in a high yield savings account, right? So maybe that's your emergency fund. That's one option. At least it's getting some return there. You can invest it maybe in a retirement account that gets you some tax savings as well, or in your brokerage account if you think you might need it within, let's say, 3 to 5 years or something like that. And then finally, you probably have investment opportunities in your business too, right? So maybe that's like a contract employee to take some work off your plate, or some sort of growth investment or whatever it is, right? The idea is you want to put that money to work in some purposeful manner. The second problem we often see is that there's poor separation between business and personal funds. So often with entrepreneurs, especially as they get started, all the money is running through one bank account, right? And you kind of manage, it's probably a business banking, but sometimes personal too. And you kind of manage everything from there. And it just creates a sloppy, undefined mess. And what is my money? What isn't, right? What is family money? What's for the business? This is very stressful to understand. It's very stressful to navigate on a day-by-day basis. The third problem scenario that we see often is irregular or reactive cash management. And basically this comes down to you don't have a plan, right? So you're catching up with taxes at year end instead of planning and paying quarterly. You're scrambling to cover large expenses that could have been anticipated. In fact, were anticipated. You just didn't really plan for it. If you have lumpy cash flow coming in, which is super common, but if you combine that with poor planning, that leads to a cycle of, let's say, deferring tax payments or building credit card debt and then paying them off when cash comes in. I'll say this is very stressful, and it's just a huge signal that you just need some planning and support to help you navigate what is a pretty complicated situation. All right, so fast forward a bit. You've implemented a system. You're managing your cash flow on purpose. How do you stay on top of things and troubleshoot problems as they come up? And also, maybe you did a few things that weren't necessarily on purpose this quarter. So here's how to get back on track. First step, regular check-ins in the business, right? Ask your bookkeeper, because we know that you have one now because you've been following this cash flow system. So that bookkeeper is going to send you monthly profit and loss statements, right? Hugely important. Now you got good information, good data. Check your bank accounts weekly, all of them. That guide to having multiple accounts, check them. Check in with your team at work, at your business as needed. And then finally, make sure your automatic contributions are working and nothing's gone awry in that sense. That's the business. You also have to stay on top of family stuff, right? So I love family financial meetings. And remember, this isn't just you on the hook. Maybe your spouse makes as much or more than you and is going to tell you that you have more leeway this month, right? So you're a team. Make sure you're operating that way. You don't have to do this in a vacuum. And then always connect finances back to family purpose and values. Next part, tax planning. So when's the last time you got an updated tax projection? Old estimates and not saving enough is a big reason for things going off the rails. I suggest my clients get updated tax projections halfway through the year, usually before third and fourth quarter payments are due. And yes, you might have to pay more for this, right? You might have to pay your tax preparer for a projection or two. Good. Pay for it. It's worth it, and it'll prevent loads of undue panic and stress in March or April when you get a surprise and a very large tax bill. Adjust tax estimates as needed based on business performance. Once again, your accountant will help with this. So the first thing the Wealth Advisor should help you do is with comprehensive cash flow mapping. So we gave you this system, and maybe you're wondering, how much cash do I have in these accounts? You told me not too much. I obviously can't have too little. What's the sweet spot? And obviously the devil's in the details. Every business, every family is going to be different. So a good wealth advisor is going to help you strategize that and help implement it as well. So the wealth advisor can help you define target cash levels for business and personal accounts, and then coordinate between the tax professionals, the bookkeeper, business, family, just kind of making sure that everything's working and coordinated in support of business goals and personal goals. Where to save, what type of account, in coordination with your tax preparer probably. And then finally, once the money's invested, you have to actually invest it, right? So what's the investment allocation? And what are your goals and all that fun stuff? So I think there's an element of contingency planning. So what happens if cash needs to go back into the business, right? So there's all of these risks that we just live with, right? The future is always uncertain. I think a good wealth advisor is going to help you think through those risks. And specifically when we think about cash, it's like, am I going to have to put money back in the business to pay payroll or whatnot? What happens in that scenario and where does it come from? There's also sometimes unexpected expenses or opportunities to take advantage of. And once again, just some contingency planning is always helpful. And then the final one would be ongoing guidance. So help navigate very complicated financial decisions. If you have a partner or a spouse, there's going to be different wants, right? If you have business partners, there's going to be different wants. And it's just helping navigate those things. And obviously keep everything aligned with your purpose and goals. So I think good wealth advisor is always coming back to the statements of financial purpose or values, purpose, all that fun stuff, your family purpose, and just kind of making sure that decisions are being oriented based on that core statement, right? That core statement of what you and your family are all about. And then finally, it frees you to go run your business, right? To go do the things that you're super special at, that you're unique about. So what are the next steps? You can subscribe for more videos about building a business on purpose. You can visit my website, link in description, for resources and worksheets to help you get started. And by the way, while you're there, if you need more help, set up a consultation. I'm here to help. I'd love to help you as well. Remember, no system for cash flow is going to be perfect, and it's going to be ever evolving at the same time. But ultimately, having a plan provides peace of mind. It helps you make confident decisions. And you want to be proactive and build on purpose. That's the part that really matters.